Welcome back to ATN Business and Atlantic Television Network. Now to the rest of our stories. European markets were lower Tuesday as regional sentiment was further after a shaky start to the week, with investors watching the conflict in the Middle East closely and its potential impacts on oil markets, supply chains, and the global economy. The pan-European stock 600 was down 0.9% in early deals, with all sectors and major bourses trading in the red. Mining stocks shared 4.54%, while household goods fell 2.37%. European luxury stocks, including powerhouse brands LVMH and Kering, retreated on the open as sentiment turned sour on a potential demand boost from stimulus measures in the key Chinese markets. Elsewhere overnight, U.S. stock futures were little changed following a losing day on Wall Street Monday as rising oil prices and bond yields weighed on markets. In the Asia-Pacific region, an initial rally for Chinese markets lost steam after a briefing from the country's National Development and Reform Commission provided new details on further stimulus. Earlier, mainland China's CSI 300 index has skyrocketed over 10% at the open at its return from the Golden Week holiday, but the index paired gains later in this session. Key releases for markets this week include U.S. Federal Reserve minutes and German trade on Wednesday, U.S. inflation on Thursday, and UK economic growth on Friday. Porsche is recalling 27,527 electric sedans in the U.S. over concerns that they may face a short circuit within the battery module, the National Highway Traffic Safety Administration said on Tuesday. The recall affects Porsche 2021 to 2024 Taycan models, NHTSA said. A short circuit in a high-voltage battery increases the risk of a fire, the regulator said. A remedy will be issued by dealers who will install a diagnostic software in the vehicles and perform free repairs if needed, the regulator added. China will start to impose provisional anti-dumping measures on branded products imported from the European Union this week, according to a notice from the Ministry of Commerce on Tuesday. Chinese customs officials will collect security deposits from companies that sell brandy originated from the bloc beginning this Friday. The deposit amount would be between 30.6% to 39% of the total value, the notice said. The decision reversed a preliminary ruling in late August when China said it would not impose any anti-dumping measures, despite concluding that European distillers had been selling brandy in China at a 30.6% to 39% margin. Tuesday's move also came days after the European Union pressed ahead in adopting definitive tariffs of up to 45% on China-made electronic vehicles last Friday. The additional tariff, which could be as high as 35%, would come on top of the existing 10% rate. China is strongly dissatisfied with the EU's adoption of the anti-subsidy duties on Chinese electric vehicles, a spokesperson for the Chinese Ministry of Commerce said in a statement on Friday, calling it a protectionist act that is unfair, non-compliant, and unreasonable. China launched the anti-dumping investigation on brandy imported from European Union in January. China's economic growth rate is expected to decline further in 2025 despite a temporary boost from recent stimulus measures, according to the World Bank. The international lender estimated that China's growth rate would drop to 4.3% next year, down from a projected 4.8% in 2024 in an economic update on Tuesday. The 2024 figure is up 0.3% from the bank's forecast in April and comes after Beijing rolled out a recent raft of stimulus measures, boosting investor confidence and prompting a stock market rally. The World Bank attributed weak Chinese consumer spending to many of those concerns, on top of challenges such as persistent property market weakness and aging population and rising global tensions. On Tuesday, the chairman of China's National Development and Reform Commission pledged more actions to bolster the country's economy, including speeding up special purpose bond issuance and local governments. However, the official stopped short of announcing any new major stimulus plans. The World Bank has long advocated for China to boost its growth through bold policy actions such as unleashing competition and reforming education. The World Bank estimates that the rest of the East Asia and Pacific region will grow at 4.7% this year and rise to 4.9% next year amid expected export recovery and better financial conditions. Nevertheless, the region will need to find more domestic drivers of growth as China slows down, it said.